Hey guys, welcome back to Compare Return. In this week's video, we're bringing you our April market review. There was three big stories this month. Tech profits being reported, so that's all the big players, your Googles, your Amazons, your Facebooks. We've also seen in Europe, JP Morgan scoring an own goal, and we've also seen in America, Biden's $4 trillion stimulus. So let's get started, guys. As always, this isn't meant to be taken as financial advice. Please seek a professional or please educate yourself, even better. Okay, so the top headline figures for the month. Let's just look at the markets. The NASDAQ, which is the tech composite, is up 7.2%. The S&P 500 is up 5.2%. The world index, the ETF world, is up 5%. Euro stocks is up 3.8%. And the FTSE is up 3% for the month. So profits in the tech sector. So if you know me or you've been watching any of my videos, you'll know how much I love tech and the tech sectors. And this month's profit report really tells you why. If we go back to the last video, it goes over why you should always be invested. And the other video from last month talks about the dip in the tech sector. So always be invested, or if there's a dip, and you see a dip in the tech sector, what does that mean? You should have seen that as a buying opportunity. So if you're not paying attention to these market movers, or even worse, the person who you're paying to look after your money isn't paying attention to these, then you really need to start doing that, guys. And here's why it's so important. The tech giants smashed Wall Street projections with revenues at absolutely crazy levels. Reason for this is, we saw more people online. The pandemic winners, obviously, is a lot of the tech sectors. They did very, very well. And here's just how well they did. Apple had 89.6 billion record-breaking revenue in Q1, and it doubled its profits to $23.6 billion. This is off the back of the 5G handsets being released, and obviously a lot more people being online nowadays. These aren't small companies. That's the other thing to keep in mind, guys. These are mature tech companies. So it's absolutely mind-bending to see a large cap mature company double its profits. It's just unheard of. If you're going to be an investor and pick your own stocks, you need to start listening to the biggest companies' conference calls, guys. That's a tip. One of my tips for today is start getting your head into the conference calls, because these conference calls, you can download the transcripts as well, so you don't even need to listen to them. It's super easy. This also will tell you from companies that are in infrastructure, like UPS and GE. Guys, this will give you so much information and insight into what's going on in the investment world. So it'll tell you where the market demand is. So obviously, where areas like GE and UPS are paying attention to, that's where the demand's going to be. So once again, if you're going to be looking after your own money, you have to be spending time on this. And if your financial planner or advisor doesn't know about this, then what are they doing, guys? That's where you need to be paying attention to. And we're actually going to give you a few little tips today. Flying in the face of regulators trying to clamp down on Facebook. Facebook itself actually posted a $26 billion revenue, shattering the Wall Street expectations. Expectations and projections are already high for Facebook, but they just come out and absolutely stomped it. Now, what I've done for you this week is I've actually put in a link, the Facebook Investor Relations website, where you can download the Q1 report. So go straight to the description of this video. You can download one of the reports and get reading, guys. So that's our first one for Facebook. Google, Alphabet recorded a revenue of $55.31 billion. That's up 34% from a year earlier. So that's a net profit that more than doubled to $17.93 billion. So we're seeing the profits increasing as well, which tells me there's better efficiencies going on inside those companies. It's the third straight quarter of record profits for the company. It must be nice to be in the largest new sector we have ever seen. That's digital advertising, and that's where Google is. Here's where it gets really crazy. They just posted a $50 billion stock buyback. Can you imagine the conversation going on in that boardroom? Hey guys, should we have a $10 billion, $20 billion buyback, $30 billion buyback? Stuff it. Let's do a $50 billion buyback. That's unheard of. Now, to put that in perspective, that is larger than 350 of the top 500 companies in the S&P 500. Also, the cheapest company in all the FANGs. So Facebook, Apple, Netflix, Google, and it's the cheapest one, and they're already posting a $50 billion buyback. It's unheard of. This is why I love the tech sector, guys. Microsoft, one of the oldest and the biggest players in the sector, reported third quarterly sales grew at one of the strongest rates in years. It's set to cross the $2 trillion in market value. That's one company, $2 trillion. Its revenue rose to $41.7 billion in the first fiscal quarter, up 19% from a year earlier. It's the biggest quarterly rise since 2018, and profits jumped 44% to $15.5 billion. That's probably off the back of, computer sales, the Surface tablets and all that. So for a company as big as Microsoft to be posting a 44% jump in profits, absolutely crazy. Right, guys, fast play round. Top trending tickers, and here we go. Apple, Facebook, Qualcomm, Teladoc, Shopify, Nokia, Spotify Technologies, Clover Healthcare Investments, NASDAQ, Amazon. There's just a few tickers for you to be paying attention to, guys. Okay, on to our next story. The financial football fiasco. How JP Morgan scored an own goal. Now, I'm sorry, but I can't help but laugh at this story. If you're a big bank and you want to do something to rally the whole world against you, maybe pull off the GFC. If everyone remembers, the 99% shut the banks down. Well, I think this one actually topped it. We had JP Morgan over in Europe getting the absolute wrath of the entire football community against them. This has got to go back down as one of the worst banking decisions ever, and here's how it played out. So, the proposal was to put together a super league. Yeah, sounds great. All right, guys. Now, the problem happens is that this super league is going to be a contender against the UEFA Championship League. So there's already a league in there, and that league has Europe's top teams. They compete every year. The kicker is here, and why people were so upset is that that league has a qualifier based on their domestic success. So to get into the Super League, you have to be, or the UEFA League, you have to be a qualifying winning team. When they did a poll on this, 89% of fans said that the main motivation for this was just a cheap, dirty money grab by JP Morgan. How much money did JP Morgan want to face for this? It was a $4 billion deal they were trying to put together with these clubs. What was the end result of all this? Well, JP Morgan actually came out and issued a public apology as follows. We clearly misjudged how this deal would be viewed by the wider football community and how it might impact on them in the future. A spokesman from the bank said, "We will learn from this." Yep, you're definitely going to learn from that one. Whoops, bit of a social faux pas there, guys. Okay, on to our third story for the month. President Biden's $4 trillion stimulus plan, which has come in two halves so far. So the first one we saw back in March, which is the $2.3 trillion Building America plan, which is all based around infrastructure. Now we've seen the family plan come out, which is a further $1.9 trillion. From a finance perspective, these are really important to pay attention to. What does President Biden in America having a stimulus plan for Americans have to do with the price of fish in China? Well, when the American government is injecting money into sectors, those sectors are set to have more cash. More cash equals more sales equals more profit. So it's really important for you to be at home to be paying attention to exactly where these stimulus bills are going to. So for our second free giveaway for this video, I've actually put another link in the description which links to a New York Times article. Unfortunately, that article is behind a paywall, but you can view it once for free or disable an ad blocker. The reason why I'm showing you this article in particular is its infographic is laid out fantastic. So the infographic shows you in exact sizes where all these funds have gone. So it's a really good visual snapshot of what's going on in the market. So Biden wants to put a further $4 trillion into the market. Just who does he think he is? How is he going to pay for this? Let's go to our favorite right-wing news outlets. Crazy, radical, unheard of. What are we talking about, guys? obviously a tax raise. So he plans to pay for this over a 15-year period by doing two things. One is increasing the income tax levels of the top earners in America, and number two, to increase the corporate tax rate. Now, if you have a look at the history of corporate tax rates and of income tax, the highest marginal rates, that's all you need to know, guys. Where we are today, 2020, they are not at all-time highs, especially looking back to, you know, the 50s and 60s, the heyday. Corporate tax and income tax have been much higher. That's how Biden plans to pay for it. Now, the buildings and utilities is certainly going to be a boost to that sector, which is already set to be huge for 2021. There has been a dip in home purchases for Q1 in 2021. That doesn't mean that the sector isn't growing. The reason for the dip in purchases is there's just not enough houses being built. If you have a quick look at timber, which I've talked about a few times, that's a good key indicator of what's going on right in that sector. What this really also talks to more broadly is Biden's vision, you know, where he plans to make a big push into governmental spending. Previous governments, both Republican and Democratic, have always kind of left the government's role in the economy up to the economy. You know, they think that the economic companies and the broader economy at large is the best people to deal with the money. You know, no one knows business better than business, and that's been the traditional view, is to let the corporate sector look after itself. Biden seems to see things a little bit different. He seems to think that government can have a bigger role in the economy, and government spending can actually stimulate the economy a lot. This isn't unheard of. You know, we saw Kevin Rudd in Australia do this through the GFC to, you know, questionably fantastic results. So that's another key thing to pay attention to, guys, is what Biden sees his government's role being in the economy is also going to be great. Okay, guys, let's dig in a little bit deeper into this stimulus. Where is the money going and what are we going to be seeing? So I noticed that $80 billion is a package going to the IRS to increase their power. So it seems like things are starting to finally heat up a little bit in the tax sector in the US. We don't know how this is going to look, you know, maybe closing tax loopholes, maybe higher corporate tax, but one thing he's certainly doing is giving a little bit more money to the IRS to arm them. There's also going to be $174 billion going to incentivize the purchase of EVs. So, you know, if you're an EV company or you support the EV sector, you know, that's going to be huge, guys. So get investing. The buildings and utilities, you know, certainly saw a boost. That's already been huge, as we talked about before. So pay attention to that as well. Fantastic. So that's been the monthly market review. Once again, we've given you two documents you can go into the comments and have a look at or download. What am I trying to tell you guys? Well, as we've seen, the tech sector, big dip last month. Guess what? Profits came out this month. So that was a key buying indicator you should have been paying attention to. In this month, if you're going to be doing any research, dig into, you know, the UPS conference calls, dig into Facebook's data, guys, dig into where the stimulus money is going. It's your retirement, it's your money. So make sure you guys are really putting in the effort. Fantastic. Thank you very much for watching. As always, like and subscribe. Compare Return. We're trying to connect expats with experts. Have a good month, guys. See you later. Bye.